But what happens when the pandemic passes and the support ends? Financial reality could make a sudden comeback. What happens if the government takes its finger off the printing press? Good morning, investors. Bradley here from Watson Estates, and you're listening to the largest, fastest growing podcast for Toronto real estate on iTunes, Spotify, and Google Podcasts. Yeah, we had a little bit of days in between our last episodes, but that's because of the holidays. But we are back in action. As a broker, as an investor myself, I want to know what is going on in our local market and where are there opportunities for myself, for my clients. And of course, why not start off with talking about the potential forecast for 2021? Specifically, are we in for a boom or are we in for the worst crash in 40 years? We're going to talk to different people groups, specifically the banks, the credit rating agencies, realtors, and later in the episode, we're also going to talk about what the average Canadian thinks is going to happen. As well, today, what challenges do experts and urban planners face while making Toronto affordable? We're going to talk about some of those challenges that they've got in front of them today. But the last couple of days, we've had a lot of fun, spent time with family. In fact, yesterday we did green eggs and ham. My wife, Sandra, made that. She's the creative one. And this morning, in fact, while I'm recording this, my young ones are eating flower cucumbers. Who would have thought you could cut a cucumber in the shape of a flower? But holidays are great, right? They allow us some time, quality time with our family. And you want to give, at least I do, I want to give my family everything that I didn't have growing up. My family was so poor that we could only exchange glances at Christmas. But we're here having fun. And I'm excited to be back for the show. If you guys could, please go on iTunes, leave us a rating and a review if possible. And as well, while you're at it, please download the last 5 episodes. It does help boost us on iTunes. And we're doing quite well. I'm very surprised. And now that we're back, I know 2021 is going to be an unbelievable year for the show. And I appreciate all of the time you guys put into learning and listening as I do. And we track what's going on in the market. Okay, so let's talk about forecasts for 2021, shall we? So we're going to start off with our article today, huffingtonpost.ca, called Canada 2021 Housing Forecast Call for a Boom or the Worst Crash in 40 Years. How can you have that in the same headline? Well, they managed to pull it off. And so I wanted to have this conversation on what are the different opposing views. What comes next in our market? Here's what it says. Amid an unpredictable pandemic, forecasts for the housing market are pretty much all over the map. They've been that way for months. This year's batch of year-end forecasts for Canada's housing market are all over the map, from predictions of rapid price growth and housing shortages to warning of a market crash. There's a forecast out there for every taste, which admittedly isn't very helpful. I mean, this is really the basis of the show, is trying to navigate this. So here are the two camps. Pitch your tent. Those who see this year's hot housing conditions continuing into next year, thanks to low mortgage rates and a lack of housing supply, and those, camp 2, who see trouble coming once mortgage deferrals and government income supports stop. Not if, but when they stop. Of course, it's not surprising the real estate groups are on the side of the boom. They say the CREA, Canadian Real Estate Association, an umbrella group of local real estate boards, is forecasting, and we've talked about this on the show before, 9.1% jump in house prices in 2021, with Ontario leading over 16%. Woohoo! But what about the drop? What about the people who think that we're going to see a drop in 2021? Well, Ontario and British Columbia, here's some fun stats for you, saw their populations decline in 2020. The first time that happened in records going back to 1946. So for those of you who think immigration is getting in the way, recognize this year, since 1946, is the first year we saw a decline in our population. So the market crashers would say in a forecast this month, investment research group Veritas said there are 2 possible, quote, supply shocks heading for Canada's housing market, which could flood the new market with new listings and push prices down. Now, I am relatively confident in our market. If you've been following our show, you know that. So I love hearing the counterpoints. Give it to me, baby. Counterpoint number 1. Here's our 2 risks, the 2 supply shocks. Number 1, the first is from the tanking rental market. Ooh. Rental markets in free fall in many major cities. In a survey of its investors' client, Veritas found signs a growing number of investors are planning to sell. Now, I find that interesting because, of course, we were kind of talking about this early in COVID. We noticed there was a bit of an overlap. The rental market got completely sideswiped, double-digit price drops all over the place, 20% plus. Now, that we question whether that would translate into something in the ownership side, buying and selling. And so this is kind of a lingering point, I guess they have here. And so it makes me, before I just take what they say at face value, makes me wonder what is happening in the rental market. I think it'd be wise for us to look at recent stats. These stats came out in the last 16 hours. GTA, this is from Zealand, GTA rental market monthly update. Rent prices are down month over month in December by 1.4%. 1.4%. However, both, listen to this, guys, let this be a leading indicator, maybe. But again, rental market is the worst. If there is a terrible spot to be in right now, it would be in owning as a landlord in rental market. For people who want to rent, it's great news. But listen to this. Tell me if this doesn't sound like a change of a trend. Both active listings and rental months of inventory are trending down now, which are the signs of stabilization. So if in fact we're going to have a supply shock on the rental market side, but yet we're starting to see stabilization happening in the rental market, maybe not. There's a disconnect there. Since borders are still closed, it's not clear how sustainable this stabilization is. And there's way more reasons why you could think supply shocks will happen in the rental market. We'll get to a few of those as well. But I thought, here's another great point. In spite of the month of inventory decline, it's still a renter's market and rent prices should continue declining in the near term. So don't think, we're safe, stabilization, we're good. No, not quite, right? We've got enough pressure right now. Prices will keep going down, but I think it's an important first step. Average GTA rent price reaches fundamentals, so any further decline should be considered a, quote, good deal for renters. So if you're looking to scoop up a deal as a renter, I mean, we're near that, I guess is the lesson there. So what's the other supply shock they say? It is the mortgage deferral program. Remember that thing I thought we put to bed months and months ago? No, apparently that's still an issue. So let's look what they say. According to Canadian Mortgage and Housing Corp, as many as 16% of Canada's mortgage borrowers got a 6-month payment holiday, which we talked about, and that was why we're freaked out. Veritas back then had 3 scenarios. What if 5% they default? What if 10% default? What if 15% default? Okay, and then they say that would range from price drops from 4% to 11% across Canada, including a 10 to 17% decline in Vancouver and a 15 to 26% decline in Toronto. 15 is the best case scenario, and that happens if we have defaults of 5% of those mortgages. So why are we saying we're putting it to bed? This is clearly a big issue for those who are still kind of worried about our market. So let's look. Steve Streski had a Twitter post. This came out December 29th. Per the Bank of Canada, over 99% of households with expired deferrals on any kind of debt have resumed repayment, at least for now. So our worst case scenario was 5%. Was that maybe a little bit aggressive as a best case scenario, 5%, when we have less than 1% still at the table? Ben Ribideau had an amazing Twitter post. It says the, quote, deferral cliff is officially a nothing burger. This was at the end of December. Less than 45,000 mortgage deferred at the end of November. Had all of those houses hypothetically been foreclosed or listed for sale this month, there would still have been fewer homes for sale across the country than in November 2019. We'd still be up. Or I guess we would be down in the number of sales. How do they say that? Fewer homes for sale. Available, so supply. So that's not, even if everything were to swarm the market, not enough. It's not enough. Those were literally the 2 shock factors. Now, of course, we're going to hear some other counterpoints, but I mean, it seems resolved in my mind, at least those 2 things. So what is the worst thing that could happen? Let me ask that question. And this article would say it's a return to normal. That's the problem. We're going to get back to where we were before. That's a problem. Why? Some analysts fear that a, quote, return to normal could be a trigger for a housing correction with emergency governments and lender supports in place. The market has fared well, which is true. But what happens when the pandemic passes and the support ends? Financial reality could make a sudden comeback. What happens if the government takes its finger off the printing press? Here's my theory, because this is a big unknown on either case. My theory is the support won't end for a while. I don't think it can. I really don't. History is the best indicator of the future, and the government won't want to let up on spending. As Canadians, we're slow to change our ways. I mean, look at us. I don't know about you guys, but our family, we name our kids after deceased family members. Maybe you do too. Like my brother named his son Grandpa. All right, so let's look at the different groups. Let's look at the different, what do you call it? I don't know, whatever. Segments. We'll start with banks. Okay, banks. What do the banks have to say? RBC, the bank's best case scenario calls for a 6.1% increase in house prices, while its worst case scenario, a whopping drop at 29.6%. Sorry, I went all Alabama there for a second. Almost 30%. That's a huge range. Up 6 to down 30? My goodness. Well, we got another more recent projection from CIBC. CIBC's risk models show they anticipate a lower rate of home price growth over the next year. Even though they see things slowing down, they generally don't expect prices to fall. Only in a worst case scenario do they show falling prices, making them one of the most optimistic banks, as worded by Better Dwelling. They like to make sure you know that's the optimistic one. Be careful. But they also have a downside fall for Canadian real estate prices of 7% and a rise of Canadian housing prices by 11%. What a huge range, even at the bank level. Who knows? Who knows? Craziness. What about credit rating agencies? What do they have to say? Well, Moody's, one of the big three, says we expect greater resilience in lower density markets outside Canada's large urban cores. This whole conversation about condos, maybe not included. They say within large cities, condos will fare worse than single family homes because of the problems in the rental market. Sound like a similar tune? The pandemic will lead to even further widening in economic inequality, including housing. Fitch Ratings, also one of the big three, says although we expect delinquencies to increase in 2021, we do not expect the level of delinquencies, distressed sales, or foreclosures to increase to the level seen in the U.S. during the financial crisis. There's one thing that the forecasters seem to agree on in this article. All in all, is that whatever happens in the next few years, the long-term outlook for Canada's housing markets is bright. And Canadian homeowners are unlikely to see the sort of financial hardships Americans saw during their housing market bust a decade ago. Sounds promising. Doesn't sound like we have that type of scenario. We did it the Canadian way. We did it together as a family. Family is the most important thing. Did you know the F in orphan stands for family? Oh, wait a minute. That's a little awkward. Backing on. Back up here. Moving along. Realtors' perspective. What do the realtors have to say? Those notoriously optimistic losers, of which I am one. CTVnews.ca, what to expect for Canadian real estate in 2021. While each expert, because they put this panel together, talking about Vancouver, Calgary, Toronto, Montreal, all of which we're ignoring except for Toronto. While each expert expects 2021's market to look a little different, they all anticipate the prices for mid-range detached homes will only go up. You got a sure bet, it would sound, from all of these groups in the low rise. While bidding wars for houses are poised to heat up in many parts of the country, condos are a different story. There it is again. Condos are different. All the experts agree that small one-bedroom condos in downtown core have already seen a price hit in the 2020. And these prices aren't expected to quickly rebound in early 2021. There's no way they're going to do well in early 2021. There's no way. Well, what if they're already doing well? What if your stats are wrong? What if, Mr. Article, Scott Ingram, who's been tracking these things monthly, now has a monthly stat looking at November, December. Wait until these stats come out, guys. It's January 4th. Give it a couple days. It'll be very interesting to see what Treb says. Treb Stats Day is coming up this week. We'll talk about that. But he says this is very unusual. Listen, 416 condo apartment sales in November were 1378. In December were 1506. That's an increase in condo apartment sales of 9%. Well, then the freehold, though, freehold's doing well. Well, wait a minute. Hang on. 416 freehold sales, November 1437, December 971. That's a decrease of 32%. Maybe everything you think is happening right now in our market is backwards, because the stats right now for the 416 sure show that. They sure do. Oh, man, am I excited to see what comes out of these Treb stats. I think people will get caught with their pants down. Pull those up. Expect to see prices suffer is in one-bedroom condos. This is back to the article. Particularly in buildings downtown with a high proportion of renters and Airbnbs. Oh, Airbnbs. What about that? We'll talk about that in a second. They say this: I don't think we're currently at the bottom of condo prices, so I do think urban condo prices will continue to suffer in Q1. This is all from this conversation, and these are from realtors. Realtors, la real estates, right? But Airbnb, we need to pay attention to this. And if you listen to our podcast, that January 1 was a key date for Airbnb. In fact, that was the date. If you don't register with the city of Toronto, your Airbnb, we're going to bring the hammer down, baby. Well, listen to this. Airbnb regulation in Toronto starts with a failure. Fail, because it's the 4th today of January. Is anyone surprised? Listen to this. On December 10th, 2020, Toronto said that Airbnb enforcement will start after January 1st. For sure. For sure. They published it on everything. They said, for sure, be careful. We're threatening you. Watch it. Watch yourself. Well, now it's been extended to January 8th. Plenty of listings where I'm supposed to see registration numbers. They're looking, this is a Zealand post looking at the Airbnb post. It's like, why is there so many listings on Airbnb? My goodness. So Airbnb, I think we do need to track this. Don't get me wrong. We need to be paying attention because that could mean a boost of supply, but people aren't really taking it seriously. Not even the ones who are supposed to be putting handcuffs around it have been taking it seriously. They've delayed it. The one thing they said they wouldn't do. Let's see how that plays out, okay? So more young investors, from what I'm hearing in these articles, are expected to continue to scurry along, run off into the 905, leaving the city for dear life. Are they leaving because they want to? Are they leaving because they have to? In any case, it's not human. We need to protect those baby investors in our city. There is an animal that leaves their family shortly after birth. It's called a bison. It's so dumb. Sometimes I really blow it. I think my family's finally trying to catch on that when I tell jokes in sign language, they don't fall for it anymore. They start standing further away because they know that they're like, I ain't falling for that punchline again. Sign language punchline. Blow 2 punchlines with 1 joke. All right. What happens do experts and urban planners face while making Toronto affordable? So we've heard of a number of predictions. Now we're going to talk a little bit about affordability. And then we're at the end of this podcast, we're also going to talk about the confidence that Canadians have, if at all. So this article, nowtoronto.com, is called The Struggle to Make Toronto Real Estate Affordable. And they talk about one issue that I think is another thing we need to be paying attention to, which is the vacancy tax. They just graze over it, but we're going to be keeping track of that. Brokers and urban planners debate how a home vacancy tax and other efforts to make housing affordable will play out in 2021. This is a conversation that happens between 4 panelists. 2 of them are brokers, Odine Eccleston and Mireille Mansour, and 2 urban planners, Paul Demsack and Cheryl Case. And so they have this conversation on what does this look like? And they say this: one thing's for certain, demand for housing remains high, but the city needs a greater diversity of housing options while taking environmental concerns into account. Here's what they say about the vacant homes tax and how it will help. A lot of these condos were purchased by foreign investors. This is from Mireille Mansour. I think that the vacancy tax is going to help that a lot and also increase the supply in the homes as well. Maybe the vacancy tax will help. Again, all under this assumption that supply is tight. But that's a tangible, that's like a physical, something's going to happen and then something's going to happen. But what about this? Tell me how fluffy this sounds. Thanks, Cheryl Case, for your input. People invest in land for personal value, a home for their family, and or investing for their future well-being. Once you meet those 2 goals, it becomes an ego issue. You homeowners and your damn ego. Your family needs are met. You have enough money for your savings, for a safe and comfortable retirement. Maintaining your house value, not renting at lower or not selling it for lower, becomes an ego thing. And that is actually quite destructive. Since when is buy and hold an ego? How dare you want more for your property? Right? It's not like holding a property makes you royalty dough. Come on now. Which reminds me, you know what the similarities between the royal family and yeast are? Speaking of royalty and dough, they're both inbred. All the English people say, that's not very nice. All right, let's bring it back to North America. Okay, well, we've got to spread out the love here. How do kids in Alabama draw a family tree? With a circle. In any case, that ego. All right, look at detached versus condos. Paul Demsack had a really interesting point. I love when we look at some stats. I'm not a numbers guy, but I think numbers help solidify points. In the late 90s, early 2000s, we were building an average upwards of 30,000 detached units annually. Then around 2005, 2006, what happened? The Ontario Greenbelt. What that basically said is, quote, stop building out and build up. The number of detached housing units significantly went down since that time in 2005. And the point that we're building less than 10,000 unit annual detached, from 30,000 to less than 10,000. Right now, we're hovering around 5,000 units annually this time of year. The point is, we're not building enough low rise. And the reason for that was the Greenbelt. Build up. Does that mean that there's a demand that's shrank in the low rise? Not necessarily. And I thought, you know what, let's look at some of the new construction data. Zealand had a post, came out on the 1st of January, where he tracked what is going on in the construction. Now, these numbers were back from November because they're a little bit delayed. But detaching condo premiums are widening as expected. But listen to this. Condo sales are not booming. They're not booming. New low-rise sales are in line with the resale market, and total sales are up 3.6%. Listen to that trend. The low-rise are up. The condos, they're not booming. They're stagnant. They're going up, but they're relatively flat. So we see there's a general interest in favor of the low-rise inventory, which begs the question, well, then what about the Greenbelt? Should we touch it? When things get back to normal, whenever that may be, we're expecting hundreds of thousands of people, and they're going to need places to stay. Justin Trudeau promised us that. Let's see if it happens. They're going to have to make some revisions to that Greenbelt section to allow developers to essentially build. You can't say that. You can't publish that in a major news source. They're going to have to make some revisions to that Greenbelt section to allow developers to essentially build. You can't say that. Oh, Dean, come on now. I'm sure that's shaking some trees or some hills. Zoning process is a nightmare. This is a point that I want to be made. Came from Paul Demzak. I thought it was a good point. We need much more supply. How do you do that within the confines of what is allowed to be developed? How do you actually get more supply where land is limited? It makes so much sense, right? It seems so simple. It's challenging to do through the zoning process. For example, listen to this. I'm working on a more affordable housing site. I think we're doing 7 units on that project. To be candid, the amount of work that goes into a 7-unit affordable housing project is the same as a 300-unit condo. There was another post here that was talking about where they're wanting to build in Little Jamaica, which they're saying is a neighborhood that has a risk of gentrification. Maybe you can build it as affordable, but for the specific case, for this scenario, those townhomes would have to be sold for $1.2 million if they're going to be built. So I'm going to build affordable housing, and you need to sell them for a low price of $1.2 million for a townhome. Not affordable, right? Not what we want. They don't even want the townhomes. They want affordable housing. The folks who review zoning are a different breed, man. They don't have a family tree. It's more like a family cactus, because they're all pricks. All right, let's jump into some hot topics. If you haven't already, please leave us a rating, leave us a review on iTunes. And while you're at it, please download the last 5 episodes. Helps the channel, gives you something to listen to when you're out on the road. Okay, so first topic I want to talk about is TREB. Continuing to threaten people, that strong arm, collecting my fees, and serving the public with notices. All right, so I just want to make a couple points here. TREB sent a memo on November 25th, which we talked about, to Realisophy, Zoocasa, and House Sigma, warning it was undertaking a, quote, comprehensive review of member password protected sites. You have to have a password, right? And the memo states that they could be caught with fines of $50,000. But here's the point that I wanted to share that's different. According to lawyer Brian Facey, who represents TREB, so this is TREB's side, and acted for the board on its competition case, the current climate is a result of unrealistic expectations. Not on the side of TREB, on the other side. There was a thought at the beginning of all of this that all of the data that TREB has would be just available for everybody to use and give away and monetize and sell to third parties and use for advertising and all sorts of other purposes. But they say, you know what? I'm paraphrasing here. That's not the case. You read it wrong. So the fight continues. The feud is still happening. Boy, oh boy. It's one of those things, right? You sign the thing, you're like, oh yeah, we're good. We get all this, that. But you don't know what you've got. It turns out until it's too late, right? You thought you had that, but no. Like that time I chose a glass coffin for my granddad's funeral. I wasn't sure the family would appreciate it. Remains to be seen. Oh, these groaners, man. We're really good at groaners. Punchlines, not so much. Groaners, absolutely. Another topic, Canadian seniors racked up $408 million more in reverse mortgage debt this year. This is a Better Dwelling article. Canadian seniors are still withdrawing home equities at a brisk pace over the past few months, according to OSFI filings showing reverse mortgage debt hit a new record in October. Growth of reverse mortgage debt picked up from previous months as well. However, it's still growing at a slower than usual pace. Reverse mortgages pretty much just means you got a fixed payment schedule instead of a fixed payment schedule. You pay them on the time you die, or you default, or you sell. right? So you don't have to pay them up front, but they rack up so quick, man. They're so quick. The outstanding balance of reverse mortgage debt reached $4.42 billion in October, up $52 million or 1.19 from the month before. But compared to the same month last year, this represents a 12.55% increase. You want to know why the baby boomers are losing their wealth? Because they're signing up for these damn reverse mortgages. People are out here trading their soul away for a reverse mortgage. I have a good friend, a wife that loves me, right? I got a family that respects me. And you want me to leave that behind, take my schizophrenia medication? Sometimes when I'm putting these jokes together, they line up really well. They're seamless. Sometimes you're probably looking back like, that doesn't even make sense at all. That's probably the case. First-time home buyers see new opportunities, challenges in pandemic economy. So we talked about the boomers. Let's talk about the millennials. For the group of buyers drawn to entry-level condos, McKinnon says the conditions are ripe. Buyers often in their 20s have an opportunity to live downtown or potentially have a rental property down the line. So if you're in, maybe you got a shot. But for buyers who spend their 20s and early 30s renting in cities, all that great idea you had when the prices were going to come down, I'm just going to rent, right? Are ready to settle down. There aren't too many deals to be had right now. Suburban markets that were once affordable are now out of reach. You got no options. Your options are nil. Armed with big giants of equity in their property, these are the people you're competing against in these big suburban homes. While Canadians generally saved more money during the pandemic, StatsCan noted that millennials-led households face greater economic risk this year. These younger workers, so we're talking about millennials are the hardest hit. StatsCan said have higher costs of entry to housing, less equity in financial and real estate assets because they were told to rent, and they did, and are also more likely to work in industries more deeply impacted by the pandemic. That's rough go, man. That's a rough go. And meanwhile, let's just tell everybody to rent today, right? Let's keep that trend going. My goodness. We'll put it this way. It's way harder to get into a market than stay in a market. It's quite an achievement if you can work your way in, though. And it absolutely is. They have a term for it in Alabama, actually. Outcest. That was a good one. I think that's funny. Sorry, Americans. All right, so let's move on. Downtown Toronto commercial real estate scene. We've been tracking the commercial real estate scene, the office space. Are people ever going to go back to work again? Because it has overlapping effects, right? If people go back to the office. But then we did see this article, Menkes, that 100 Queens Quay East will be the new home of Richardson Wealth. What a huge announcement that was. We talked about that a couple days ago. But here's what they say. I think there's still a strong demand for office. We'll see a shift going into next year. It'll be interesting to watch and see when the vaccine is rolled out, how we continue to interact and be involved with office space. Here's what they say. Lucky for the most eager spectators, big difference. It appears we won't need to wait until 2021 to see such shifts. According to the multidisciplinary real estate development company's vice president of office and retail, Sean Menkes, the thaw has already begun. The thaw, you know, that freeze that happened in the commercial space, it's thawing. What do you thought about that? Canada.ca had an article as we round into our last topic about COVID. Effective January 7th, all air passengers 5 years or older will be required to test negative for COVID before traveling from another country to Canada. Thank God I don't got to stick a thing. I don't even know how long they are. How long are they? Down a 3-year-old's throat. Thank you for giving an exemption to these 5-year-olds. But I think it's a great thing. It really is good that we can make sure before people come in our country that they're not with COVID. We need to take COVID seriously, guys. I think this is a good thing. Even Dwayne Johnson and his family all contracted COVID. You know that? They figured it out when they couldn't smell what The Rock was cooking. So that's our last topic. So we talked about all of these parties, what they think is going to happen in our market. But what about the Canadians? At the end of the day, they're the ones buying the properties, not the banks. I mean, kind of, but not really. Like, they're not the ones leading it. They're just making sure that your interest rates are super low. What do Canadians think is going to happen? Because this is going to dictate whether the market can go up, whether it can go down, all things considered. Canadians' perspective is this. Canadians show highest level of real estate market optimism in 9 months. The level of consumer confidence in Canada remains above its 2020 average, according to Bloomberg Nano's Canadian Confidence Index, the BNCCI, a weekly measurement of the economic mood of Canadians on the strength of the economy, job security, real estate in their neighborhood, and their personal financial situation. just to lay this out for you, 50%, 50-50 would mean we're kind of up, down. We're all happy. That's our talking about our confidence mood. It's a balance in the confidence mood. If it were to be up, it would be higher confidence. To be down, it would be lower confidence. Where fresh data is concerned, the index registered at 53.48 in December. The reading hovers over the 52% recording 4 weeks prior, but still below the 12-month high of 57.06. So we haven't reached the same level of confidence that we had at early back in February, March, but we're definitely trailing upwards. We are. Looking at some of the other stats, they had Bloomberg Nanos Expectation Index based on surveys for the outlook for the economy and real estate prices was at 49.81 this year compared to 47.47 4 weeks ago. Over the last month, they're all trending upwards. For context, the average had been 55.9 since 2008, reaching its lowest point in April of this year at 37.08. So we were up at 50, just under 56, down all the way to 37, and now we're back up to 49. Closer to the highs than to the lows. And Steve Saretsky, just to wrap it up here, said, per the Bloomberg Nanos survey, 49.2% of Canadians see home prices climbing over the next 6 months. It's the highest since May 2017. What happened in May 2017? We won't talk about that today on the show. This tells me we have a bright future, though, in our market. But I have a habit of jumping to conclusions. My family's all worried about my addiction to dot puzzles. You know, those like 1, 2, 3, 4. I tell them it's okay, though. I know where to draw the line. I hope you guys have a wonderful day. A couple days from now, we're going to have a very interesting missing middle conversation with our guest. Please don't miss that. Please hit the subscribe button. And remember, when it comes to family, fellas, please treat the missus right. Because behind every man who wears the pants in the family is a woman who told him which pants to wear, myself included. I hope you guys have a wonderful day. Take care and keep it real.